You're listening to Real Talk Twin Cities on AM 1280 The Patriot. I'm Eric Purius, your co-host, along with Cheryl Kempenik.
With Coldwell Banker Burnett.
Thank you, Cheryl. And you were with us in the last segment. We heard from Christine Berger, Vice President of Political Affairs at the Minnesota Board of Realtors, talking about the potential for the mortgage interest deduction going away, which would impact all of us, including renters potentially. So you are encouraged to go to mnhomesmatter.com, put in your name and address, and have a letter sent on your behalf to your local representative to support that effort in maintaining that for all of us. All right, so Cheryl, hopefully we're able to get enough support so that mortgage interest deduction sticks around.
Boy, I agree. And you can also find that link at realtalktwincities.com, and please sign up. It's really easy. All they need is your name and your address, and the pre-printed letter will go directly to your legislator, letting them know that you want to save the mortgage interest deduction, which in turn will save you taxes at the end of the year if you have a mortgage. Hey, Eric.
Yes.
I noticed we were at a closing together on, I don't even remember which day it was, maybe
It was about a week ago.
about a week ago.
Yes.
Okay, executive title with Uriah Hogue, is it?
Yep, Hogue, yep.
And I noticed our buyer walked away with a check. How
Nice.
did that work? I thought you had to bring money to buy a house.
Well, typically you do. However, in a couple of circumstances you don't. And that money that he got back was a portion of his earnest money. The earnest money being, typically $1,000 or $2,000 that you put when you make an offer, saying that you're making the offer in earnest, and that money generally would go towards part of your down payment or paying some closing costs. In this case, he was getting a VA loan, and VA mortgages provide for 100% financing.
It's amazing.
And we had the seller pay the closing costs. I don't know if you remember that, but
I do remember writing that into the purchase agreement.
so he got a good portion of his earnest money back, such that, at the end of the day, he put a few $100s into the transaction, got a very low 30-year fixed interest rate, and so that's a big benefit for veterans.
And boy, he got an amazing home in the Miriam Park neighborhood, completely renovated, and super happy with the service that he got from you, Eric Purius, the loan guy at Bell Mortgage.
That's right. You can reach me at 612-275-2136. And Ryan, we had a closing as well, and it was a USDA loan, which sounds like a beef, or
Yeah.
I
they,
thought you were talking about lunch.
Yeah, we get steaks.
steaks and mortgages. That's our
Purple
government at work.
dye.
USDA oversees the rural development or rural housing loans, and those are also 100% financing. And they are, just like it sounds, in rural areas to promote home ownership and increase affordability. So if you drew a line, say, some miles out from the 694, 494 loop, any homes in that area would be eligible for USDA, and again, that's 100% financing,
That's nice.
and you could get money back at closing, part of your earnest money, just like we talked about for this VA guy. So those are two good options to keep in mind.
I have a listing where the buyer is using that USDA program, and from the seller side, it's a little nerve-wracking. I followed up with the lender. I'm sorry, Eric, that one, I couldn't get that one to you because it's
Okay.
not my buyer.
You're cheating on me.
I'm so sorry, I feel guilty, but I had no control. And so, at any rate, I've been in constant contact with that lender, making sure that this loan is going to go through, and she has very little control over it. Apparently, there's a checklist that she needs to make sure that the buyer conforms with, and then she submits the loan to the USDA, and then we wait. We're in a pile, waiting for approval.
It takes about 45 days, and it's not, if you do them a lot, which Bell Mortgage does, it's not that big of a deal other than the wait. But here's what happens. We're a bank. We underwrite it, we fund it, closes in our name, And typically, that's it, you're done. In the case of a rural development loan, once we're done, we send it to them, it's in Wisconsin, and they review to make sure that we did or fulfilled the checklist. And as long as we did, you're good to go. So it's more, it's not an if thing, it's just a when they get done with that review of us doing our job, and that takes about 2 extra weeks. So you just have to work with a good loan officer that knows what they're doing, has done these before, that's important. But beyond that, really, it's there's no worries.
Well, that reassures me a little bit.
All right.
We're at the end and just waiting daily for that approval to come back so we can get that property closed.
Yep, and if you want to learn more about this, just give me a call, 612-275-2136. And earlier, or last week rather, we touched on a couple of things. We also mentioned it today, talking about renting versus owning. A lot of people are renting these days, and we're encouraging them to consider ownership, because if you consider a $1,500 rent payment versus a $1,500 mortgage payment, and you look 5 years down the road, you're going to be somewhere between $35,000 and $40,000 richer, if you will, having owned a home versus renting, and that's taking into consideration, a small amount of appreciation, also fees. So that's that's a true number right there, and that's a big difference. I mean, just imagine after 5 years, you look in your bank account, and there's $40,000 that you wouldn't have had you rented.
Boy, it's huge. People don't realize how that money adds up. If you're paying $1,500 or $2,000 a month for rent, that's $24,000 in a year times 4 or 5 years. It would be great to have equity building up so you could turn around and use that equity to move on to another home.
That's right.
I just met with a couple over last weekend. They're thinking about selling their home in Egan and buying a condo, and they were actually considering renting an apartment downtown Minneapolis. And they couldn't find a 2-bedroom in a decent area for less than $2,500 a month.
Wow.
That just seems like a no-brainer to me, that especially if you have the cash and the credit, that you would want to buy. But I think there's still a lot of confusion out there that people don't realize the value in home ownership.
That's right. And maybe you've been waiting or wondering what to do post crash, and there can be a cost to waiting. And that is, as the rate goes up, your buying power goes down. So for example, let's say your monthly payment's $1,400, at a 4% interest rate, that allows for a mortgage of $293,000. At 4.5%, it's $276,000. So each half a point in rate, your buying power goes down about $18,000. Or if rates go to 5%, let's say, you're looking at buying a house for $36,000 less than you could have at those lower rates. So there is a cost to waiting. And you try to time things right. Is now a good time to buy? Is now a good time to sell? And what happened last week, Wednesday, or I guess this week, but Wednesday and Thursday, you probably heard in the news that the markets went crazy, and I'll try to give you some perspective on that here. In January this year, Freddie Mac reported national average rates, and again, these aren't rates, they're averages, of 4.43. And then most recently in September, Freddie Mac reported the rates of 30-year fixed rates at 4.16. Wednesday, that dropped to 3.9. Actually, that's from the mortgage rates from Mortgage News Daily. And so that's, that gives you some indication of what's going on with rates.
So they're pretty much at historic lows right now, and when you
Once again,
consider
yes.
that the interest rates are so low right now,
Yep.
and prices are declining a little bit in the
Yep.
fourth quarter here,
Yep.
this is absolutely the best time to be buying your next home.
Yes, I agree. Or if you've been floating or waiting or watching for a few weeks or months, the only reason not to lock in at this time is if you have absolute proof rates are going lower. And of course,
who knows that?
Exactly. So a bit of an unexpected surprise last week, but we think taking advantage of it is the positive gains a good idea. So that means that potentially, you might have thought, it's never going to be worth refinancing. You might want to get a mortgage checkup. Doesn't take very long. I can do that for you. Give me a call at 612-275-2136. You know, even if you're in the mid-4s, it might be worth doing a no-cost refinance and dropping your rate a little bit for free. Yes, no, it's not added to your loan amount. So once again, you can reach me at 612-275-2136. So we've talked about a lot of things, rent versus own, the cost of waiting. And another thing I can't emphasize enough is that you can get loans these days. You know, if you have modest credit, a job, and even 5% down, it's doable. So you can get a loan, rates are low, prices are relatively low. You're worth quite a bit more money a few years down the road if you own versus rent. So reach out to us at realtalktwincities.com or me at 612-275-2136. I'm Eric Pirius.
And I'm Cheryl Kempenek.
Real Talk Twin Cities on AM 1280, The Patriot.